I would say there's no feeling of urgency. That's very different from there being urgency. We're still looking at an economy where there's 11.5 million fewer people working than in February before the shutdown. We're looking at an economy where 1 in 10 households is short of food, and there's a difficulty feeding families. We're seeing what experts are looking at as perhaps the worst rental housing crisis in our history. And we have a mixed story between the markets and the real economy out there. And I think it's a mistake to not keep our eye on the pain that's out there, both in terms of families and their human needs, but also what the macroeconomic effect is if we take away all of the supports that have kept things so that when things partially reopen, we could partially come back. We've basically seen half of a recovery, and we can't see the other half until all of the rest of the economy is able to open up. And that doesn't appear to be anytime soon. So, we wrote in the op-ed that it's playing with fire to wait.
I was just going to say some of the problems that you're addressing aren't in the data yet, really. I mean, what we're getting still is much better than expected data. And maybe that's still from some of the benefits, the unemployment benefits, still adding to people's bank accounts and all of that stimulus that has gone through the system. But we're expecting a GDP for the third quarter of what, 30 to 40% growth? I guess the question is then what if we don't get any stimulus passed in the fourth quarter and beyond?
Obviously, the data tells different stories depending on which data you look at. If you look at coming halfway back from a complete shutdown of the economy, it looks like a lot of growth. If you look at the residual unemployment, it looks like a situation that looks very reminiscent of the worst of the financial crisis, Great Recession period. What we need to see the follow through. I give a lot of good marks to Washington, the Fed, and to policymakers in Congress and the administration for responding early on. The problem is they haven't finished the job. That's why we're hearing the Fed feels there's a need for more fiscal action. Republican and Democratic economists alike are saying that there's a need for more fiscal response. The fact that it's not being treated as an urgent moment is very different from the fact that the need is great. Just look at state and local governments. They've already laid off over 1 million people. That includes K through 12 teachers while we're trying to open schools at a very difficult time. Most states have balanced budget requirements, and they've put off reductions, hoping for some help from Washington. If that help isn't coming, we're going to see the dams break in terms of cuts that they have to make. And that's going to hurt both in terms of the services that are lost and in terms of the macroeconomic drag. I don't think the economy is ready for that kind of a hit.
Mr. Secretary, you also know Washington incredibly well and the time in which we're in and the election around the corner. Do you realistically expect there to be a stimulus deal before the election?
I certainly hope that parties will get back into a serious negotiation. Let's just remember the chronology here. The House passed a very substantial bill almost 3 months ago. The Senate waited until provisions expired, and it was almost the eve of adjourning for the elections to pass a very small bill that doesn't address many of the urgent needs. All right, so both parties have taken positions. Now they need to negotiate. They need to work it out. And yes, I think there should be more of a sense of urgency. I think they should do it before they go home. I think it's a mistake to wait until after the election. And, I can tell you from the Great Recession that when we took away the support for the economy too quickly, we paid a price in terms of slower economic growth and longer lag in the recovery. We're not back where we need to be. And I think this is the wrong time to look the other way.
Big picture, Mr. Secretary, and politics aside, assuming you were to get the stimulus deal you'd like to see, you write in the op-ed, now is not the time to worry about deficits. Do you fear, though, long-term, genie's out of the bottle with that sort of thing? And when will it be possible to convince people that it is then the time to worry about deficits?
Well, arguably, Will, if we're seeing the same mistake that we saw at in the middle of the last economic downturn, where the foot came off the gas too soon. After 2010, it was very difficult to continue any meaningful support for an economy that still needed it. So I actually think the risk here is that we stop too soon. There's going to be a need to come back to some kind of sustainable fiscal position. I've spent most of my career working to try and make sure that we could pay our bills when the economy was healthy and we'd have the resources to deal with a broken economy. Nobody imagined an economy as hurt as ours was when we shut it down. And we're not back yet, and it's too soon to act as if it's all okay. I think the right time is when we get unemployment back to a level pre-COVID. I don't think that's going to be anytime very soon. I think 2021 is going to be a difficult year.